Hey everyone, Micron Technologies is one of the companies that's benefiting from the rising effectiveness of artificial intelligence. And given that the company is slated to report earnings later in March, investors are asking if they should buy Micron Technology before the company releases its earnings report. So in this video, I'll review Micron's latest developments. I'll review their prospects for the next year. I'll look at some of their long-term outlook, their long-term operating profitability, and finally, I'll weigh all of that against its valuation to answer if I think investors should buy Micron Technology stock before they report their quarterly earnings update. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right. So in the last 3 months, Micron stock has performed relatively well. The price is up to $96.52 as of this recording. That's up from around $78 per share 3 months ago. Still, the company has excellent prospects going forward. Starting with its automotive market share and quality, Micron will benefit from memory and storage content growth as automotive OEMs expand features in ADAS, which is just other words for advanced driverless automotive system support. So think of driver assist, driver lane assist, driverless cars, all of that. Anything to deal with people not wanting to put their hands on the wheel and have the car do the driving for them. Micron is in position to benefit from that. Longer term, this is an industry that I'm very bullish on. I think driverless car technology has great potential, although I see it as many, many years away. Still, in the near term, there are progressive enhancements that are being made, including with driver lane assist, adaptive cruise control, parking assist, and all of that is helpful to demand for Micron technology. They expect calendar 2023 DRAM bit demand to grow in the high single-digit percentage range, up from prior expectations for mid-single-digit growth. Now, I repeat this every time I see the high single-digit and low single-digit number outlook from management. High single-digit stands for 7%, 8%, or 9%, which is up from the previous mid-single-digit expectations, which is 4%, 5%, or 6%. They continue to expect calendar 2023 bit demand to grow in the high teens percentage range. Looking forward over the next few years, they expect bit demand growth compound annual growth rates of mid-teens in DRAM and low 20% percentage range for NAND. So this is, in other words, storage and memory, which is the primary markets that Micron Technology operates. They expect very solid growth in these two markets over the next few years. So it's a cyclical upturn that you're getting into with Micron Technology. And historically, this has been a very cyclical company, which I will share with you a little bit later in the video. It's a good sign that they're now in the upward phase of that cyclicality and they've gone through the down phase, which was in 2023. So they forecast 2024 demand growth for the industry to be near the long-term CAGR, compound annual growth rate for DRAM, and somewhat below the long-term growth rate for NAND. So the 2024 outlook is similar to their longer term outlook as it ramps up the growth rate going forward. That's great news for Micron Technology investors. So that was the demand side. As far as the supply side, Micron's bit supply growth in 2024 is planned to be well below demand growth for both DRAM and NAND, and we expect to decrease their days of inventory in fiscal year 2024. We expect 2024 industry supply to be below demand for both DRAM and NAND, which will result in a contraction of industry inventory levels. Boy, that's great, great news, right? You hear a lot of companies talking about demand and how strong demand is for their products. You don't hear a lot of talk about supply. And you've got to look at supply because if you remember from your basic economics course, it's all about supply and demand that determines what price companies are able to charge. If demand is strong but supply is even stronger, prices are going to come down. But if demand is strong and supply is decreasing, That's going to create further increases in pricing power. That's great news for companies and Micron Technology specifically. So great news for Micron Technology stock investors. Now, longer term, Micron Technology has not demonstrated economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. So now that you understand why that's important, you could see here the industry has demonstrated cyclicality instead of economies in scale, with the most recent downturn being extremely severe and its operating profit margin falling to 39.36%. But as we heard from management, the company is now on the upward cycle of the cyclicality. So it's bottomed and it's reversing and it's moving higher, and all indications point to Micron Technology's profitability improving throughout 2024, 2025, and beyond, returning back up to these 30% levels. I would not be surprised if it reaches that in the next 2 years. And finally, looking at its valuation, Micron Technology is trading at a forward price to earnings of 14.24, which is on the higher end of where this stock has traded for, according to this metric going back a few years. The gap here you see is because its earnings were negative, and so you don't have a rating when earnings are negative, because earnings per share are the denominator of this metric. So all things being considered, the elevated valuation, the stock price increasing by so much going into earnings, and my typical hesitancy to recommend buying a stock just before earnings because of the elevated risk, all point to me suggesting that if you're interested in Micron Technology stock, I would wait until after it releases earnings to buy. Now, I have the stock rated as a buy. I think it's a good investment, but the timing I think would be better after it releases earnings, because remember, when you're making investments in stocks, it's a risk versus reward. And going into the earnings release, you probably know there's elevated risk because the stock price moves violently, more violently, immediately before and immediately after an earnings release. So to decrease your risk, I would wait until after earnings, and then I'll update investors. But I think the stock is a buy, and I don't think that's going to change after the company reports its earnings. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.